Hello, I'm Sarah Fennick and welcome to Bank to Binary's Asset Roundup for the first week of earnings season for Q4 2013, where we will look at the revenue reports from two of the biggest names in the tech sector and analyze the trading opportunities they created for binary options traders. Netflix investors approached earnings season with an earnings per share expectation of around 65 cents and received a belated Christmas present when the on-demand streaming media provider announced revenues in excess of $48 million for the last quarter of 2013. That's a six-fold increase on a year earlier when Q4 earnings were just $8 million and 13 cents a share. Let's take a look at how this report affected the price of Netflix stock and how binary options traders could have profited from a timely investment. Netflix released their earnings data after US markets closed on Wednesday the 23rd of January. The stock rose 1.5% during Wednesday's trading session before surging to its highest level since the company went public nearly 12 years ago. That's a one-day rise of over $50 a share and represented a textbook opportunity for binary options investors. Let's contrast that with another earnings season's big hitter, Microsoft. In the lead-up to the report, analysts were predicting that the tech giant would post Q4 revenues of around $23.5 billion. Well, Microsoft beat that figure by a full billion, marking a 14% increase over the same period in 2012 and prompting an after-hours share rise of just 0.6%. As you can see, the uptick was relatively subdued and short-lived when you compare it to Netflix. While the lack of strength and longevity this move wouldn't have affected those of you who traded short-term binary options immediately after the data release, it does highlight an important difference in the way different types of stocks react to information like earnings reports. Take a look at the 5-year chart for Netflix. What you see here is the steady growth of a company that recognized its core business, mail-order DVDs, did not have a long-term future. Netflix then branched out and began to dominate the on-demand internet media sector, pushing its share price close to $300 by July 2011. Then in September, Netflix announced that the company would charge separately for the DVD rentals and the streaming content and pass the cost increase onto its subscribers. The share price dropped by 75% almost overnight, and it took the company 2 years to recover. Contrast that with Microsoft over the same period and you see a lot less volatility. Even the disaster that was the kin Microsoft's attempt to dethrone the iPhone in April 2010 had a much smaller impact on Microsoft shares, relatively speaking, than Netflix's doomed restructure. So when looking for binary options opportunities on stocks during earnings seasons this month, don't just focus on the headline numbers. Consider the size and history of the company, and most importantly, how reactive its share price is in the wake of good and bad news. I'm Sarah Fennick. This has been Bank to Binary's Asset Roundup. Don't forget to contact your account executive about this week's investment opportunities, in particular US non-farm payrolls on Friday. I hope you all have a very successful week on the markets. Until next week, goodbye.